The cryptocurrency market never fails to amaze people who watch it, and Ripple's latest mysterious move has certainly sparked a lot of questions and guesses. Ripple has shocked the financial and cryptocurrency worlds with its huge purchase of XRP worth $37,000. This move, which was supposed to be secret but was made public by a leaked document, stirs up the normally calm seas. By giving a situation full of possible tactics, market factors, and theoretical studies, stakeholders are on edge, which makes figuring out Ripple's goal not only interesting but also necessary. In this in-depth look, we'll break down Ripple's strategy, which has never been seen before. This will help you understand the many effects of such a big financial move in the unstable world of cryptocurrency. When the news got out that Ripple was buying back XRP for $37,000, investors and market experts were confused at first. The paper, which wasn't meant for public viewing, explained how the company planned to buy a lot of its own cryptocurrency, which isn't something that usually happens in the world of digital currencies. This leak has given us unique information about Ripple's business and money plans. It's important because it shows that the company is optimistic about the value of its digital product. Indicating faith in its future results, the revelation of such a plan brings up a lot of different questions. Why this now? Why that much? To answer these questions, you need to look into both the amount and time of the buyback. As a pioneer in the cryptocurrency industry, Ripple's market path has been very unstable in the past. Ripple's journey has been anything but smooth, from legal fights to big business partnerships. By looking at old data, we can see that Ripple has often used unusual strategies to improve its marketplace. People should see this $37,000 buyback as more of the same. It is a planned change to a historical pattern that is meant to boost market trust and make people feel good about the market. As we put together what Ripple has done in the past and what it is doing now, well, it's clear that this buyback is part of a long-term plan, which may have something to do with the fact that it faces legal problems and has to compete with other cryptocurrencies. From the point of view of financial theory, buybacks are often used to change how people think about the value of a business. It is possible for Ripple to raise the price of its stock XRP, in this case by limiting the amount that is available. Using basic financial concepts, let's look at how this buyback affects Ripple in real life. By buying back XRP, Ripple is not only supporting its own currency, but it is also taking part in the way the market works, which is controlled by the laws of supply and demand. More deeply, this buyback could be seen as a reaction to outside pressures such as competitors in the market or ongoing legal scrutiny that may have scared away some investors. By putting money back into its own currency, Ripple shows the market that it has faith in itself. It might become less volatile during unsure times. Supporting technologies and new ideas, the buyback has everything to do with Ripple's infrastructure and technical progress. Ripple's platform makes transactions faster and cheaper than traditional banks. Perhaps even more importantly, it makes transactions more open than many crypto transactions. It is important to think about how new technologies might be driving the buyback plan. With new features and updates coming out all the time, Ripple needs to make sure that its currency stays an important part of its tech story. The buyback could be getting the market ready for new features that will make the coin more useful, which will increase demand for it. Also, as crypto technology changes, it becomes more important than ever to keep things stable and liquid. This smart financial move could be seen as a safety net against possible market changes caused by technology. An analysis of the market's effects and predictions, Ripple's $37,000 buyback has effects that go far beyond its direct financial numbers. The change has an impact on not only the price of XRP, but also the way the coin market works as a whole. In the short run, there has been a clear increase in trading volume and a small rise in price stability. This means that the market responded positively, seeing the purchase as a sign that Ripple's management is strong and confident. Longer term, this move could become a model for other coins, which could start a new trend of strategic buybacks. This could change how markets work and even what investors expect from the crypto business. So Ripple's move might not just be an attempt to boost its own reputation, it could also be seen as a plan to have an effect on the whole sector. And experts in the field and other important players have given a wide range of opinions and predictions about Ripple's strategic buyback. A lot of different views exist, ranging from strong support to cautious doubt. One well-known analyst pointed out that by buying back XRP, Ripple is not only stating that it is optimistic about its digital currency, but it is also boosting investor trust in a time when regulations are uncertain. On the other hand, another expert was worried about the long-term effects and wondered if this meant that Ripple has problems that aren't obvious at first glance. Such different points of view show how complicated cryptocurrency strategies are and how different people look at market activities. These findings are very important because they help us understand what might happen with Ripple's buyback as a whole. To figure out why Ripple is buying back its own shares, you have to look at a lot of different aspects of its business strategy, market positioning, and future-proofing strategies. This move isn't just a matter of money, it's also a multifaceted strategy move. The buyback is mostly a way to control how the market feels and raise the value of shareholders, or in this case, coin holders' shares. Besides that, it probably helps to tighten control over XRP's flow. giving Ripple more control over its price stability and the quantity of its tokens on the market. This approach may also be meant to keep a technological edge and deter threats from competitors by showing that they are still investing in and believing in their product. Every one of these parts is part of a larger plan to protect and improve Ripple's marketplace. There are still a lot of unknowns and complicated rules about how to regulate cryptocurrencies. This is how we need to look at Ripple's buyback, because how regulators decide to handle cryptocurrencies can have a big impact on how they work and how much they are worth. For Ripple, getting through these waters has been especially hard because of past legal problems and ongoing attention. This buyback could be a smart move to improve its position in talks with regulatory bodies by showing that the market is confident and there is plenty of cash on hand. This could also be a precaution against possible future rules that would change how cryptocurrencies handle their assets and interact with clients. As Ripple moves forward after the buyback, different outcomes may happen based on market factors, technological progress, and changes in regulations. In the best case, the return makes investors feel better about the company, keeps the price of XRP stable, and puts Ripple at the top of the cryptocurrency market, ready to take advantage of new technological and business possibilities. Instead, the business needs to be ready for changes in the market and in regulations that might make its strategic standing harder to maintain. Ripple's ability to change and adapt to these changes will be very important. Finally, Ripple's $37,000 purchase of XRP is a complex business move that has wide-ranging effects. It shows trust, encourages inspection, changes how the market works, and lays the groundwork for future projects. As the cryptocurrency world changes, how well and how dramatically these kinds of strategies work will have a huge effect on not only Ripple, but also the whole business.